What's up, guys? Welcome back to another video. Thanks for tuning in to Stock Essentials. My name is Alex, and we're going to be going over 5 stocks that have been beaten down heavily by earnings. And because these stocks are down so much, it provides a really nice dip buying opportunity for many people who are in for these companies in the long term. Now, most of these stocks are growth stocks, so they're going to be pretty volatile and pretty risky. But overall, if you are looking into getting into these stocks anyway, this is a really great dip to buy. And in a future video, probably tomorrow or over the course of next week, we will be going over some great plays on these stocks, not only just buying and holding shares, but playing options and the best option strategies as well to take advantage of these stocks that have been beaten down so heavily by earnings. So the first stock we're going into is SoFi Technologies. As we can see, down 14% or about $2.50 per share. So pretty heavy dip, all the way from $17.47 right before the earnings announcement, and it just completely plummeted right after this company reported earnings. So the fair value of this company is just right around $20. So it's sitting at a pretty nice discount. They do anticipate user growth to increase over the following years as they strive to improve app performance. But overall, pretty disappointing earnings from this company, and that is why it's down 14%. But it's a really nice dip to buy, especially if you're in this company for the long term. I know many of you are watching SoFi very closely. They do a lot of nice banking services. This company is not a bank, but they do a lot of similar services such as loan refinancing, investing, especially in ETF stocks, crypto, or retirement accounts. They do personal loans. They have savings accounts. They have credit cards, private student loans, insurance, auto loans, tons of great services. So this is definitely a good company for the long term. Next company on our list is going to be Wish, ContextLogic. This company has been beaten down by earnings as well, but down by about 20%, all the way from $9 and around 50 cents per share to lows of just under $7 per share. As we can see, just because it has been beaten down negative 32%. It's having a nice little rebound, and a lot of people who got in at this nice dip have made some really nice returns, especially here in the pre-market. It was down negative 28%, all the way to highs of only negative 16, 17%. So that's about a 10% gain just by buying and holding shares of this company. But I'm in the stock for the long term, and I do think that they will continue to drive users to their platform. For the Q2 earnings, they saw a 13% reduction in app installs and a 15% reduction in average time spent on the platform. But that's probably because of all the reopenings, and we do think that this is a great company for the long term. So the next stock is going to be Tattoo Chef. It is a plant-based company. They're in a lot of stores, grocery stores. You can see them in their aisles. So really strong company, up and coming. I know a lot of people have tried out their products and they said they really enjoyed it. So it is a alternative to Beyond Meat. So it's a plant-based company, and they also have their own e-commerce website where you can just buy and order online their products. So the stock was up around almost $21.50, and then it dipped all the way to $17.45. As we can see, this stock is pretty wild. It has lots of ups and downs, but overall it's having some really nice we're pretty bullish on this in the long term, even though it is up about 82% in the past year or so. So we're definitely going to be watching this and playing some options on this company. Next stock on our list is going to be Metromile. Once again, beaten down pretty hard by earnings, just around $7 per share right before the announcement, and then dipping all the way below $6 per share right after. And then it had a nice little rebound early the next day. So a lot of people made money there, but then it did continue to decline. And a lot of people see the $5 price point as really nice support, a really nice dip buying opportunity, and it always gets bought back right up. So we can use that to our advantage and sell some cash gear puts in a later video. Next stock is going to be SmileDirectClub, and it is an alternative to braces as well as Invisalign. They do clear aligners, and the difference between SmileDirectClub and Invisalign is you don't have to go into a dentist's office to use their products because it's shipped directly to you. So it's a lot cheaper and a lot more comfortable for people who don't want to visit a physical location. So they had some pretty disappointing earnings. They were all around $6.70 per share before earnings, and then plummeted all the way to $5 per share. A nice negative 27% dip. And of course, it did rebound a little bit, all the way up to $5.60 per share. So a lot of people who got into this stock right there, they made a nice 10% gain. But it is tapering off a little bit and showing some really strong support at this $5 level, just like Metromile is. So really good opportunity to make some money on options strategies. Metromile, really good company as well. They do pay per mile car insurance, which is very appealing because a lot of people aren't really driving that much and they're just wasting money on insurance. Whereas this company is designed to save you money if you don't drive as often as other people. So 5 really great companies. Obviously, they're going to be pretty risky, and all 5 of these companies have been beaten down by earnings, but that just means that these stocks are on discount. So if you have any of these stocks on your list already and are looking at it long term, these are some really good dip buying opportunities that you should definitely add to your portfolio. That's about it for this video. If you liked it, please leave a like, comment down below what your thoughts are on these companies, and if you want to see the option strategies on these companies as well, really good opportunities that I am going to be playing into next week. And of course, subscribe if you're new here to the channel. It helps out a lot. Thanks for watching.